Good afternoon and welcome to the regular midweek Sharesify podcast. I'm joined as always by James and Steve. How are you guys?
Yeah,
Very
good
well.
Ian, thanks.
And Steve, sorry to say, another bad day for the KOSPI, down another 6%. Obviously, SK Hynix and Samsung, the big losers. It was down 11% yesterday, 6% on Friday, so we're 38% off the June high. Now, from what I'm gathering, this is about concerns over AI spending and what people are calling circular financing. Can you just give us an idea what we're talking about?
Yeah, I recognise. I mean, we've had conversations off camera, and we know this is a topic that the market is worried about. A lot of retail investors might not be quite so informed. So I've written a piece about it today. Circular funding is effectively you get an NVIDIA and they help fund a data center builder, say, and they build their data center so they can make more see demand for NVIDIA chips, and it goes round in this kind of circle where one company funds another company to see demand for that original company's kit. Ultimately, it's a bit. I explained it as a bit like it's the old phrase about robbing Peter to pay Paul. It's a variant on that. Effectively, it moves money from A to B, but it doesn't actually improve the overall look. And you just have to be a bit wary about these things being extended over time. I think we're not in that place at the moment, and there's no sense at the moment that the AI funding regime is just going to go collapsing, but it's starting to tell us that investors are just getting a bit more concerned about it.
Mm,
And something you've been talking about quite recently is about CDSs, so credit default swaps, and this is really a measurement of how much risk investors see around the funding of this. And now we all know funding of AI is going. It probably touched $1 trillion this year, and we've seen lots of corporate bond issuance from the
yeah,
Alphabets, from the Microsoft, from the Oracles,
yeah,
and this is something that is very new. These big tech companies has for decades been able to self-fund everything they wanted to do. AI is such a big capex upfront spend that they can't do it themselves. So they're going to investors via corporate bonds. So this is just another measurement of investors watching to make sure it doesn't go into a red territory where funding
yeah.
becomes really, really stretched.
Oh, nice one. I mean, and one clear kind of side effect of this is market rotation, of course, which you always get when you get these stress points. And James, you've been picking up on the rotation into value and quality stocks.
Yeah, very much so, Ian. So some real quality names have met with positive receptions this week. So Q2 sales beat from Unilever. Now the important point here was it's the best volume quarter in over a decade. So that's volume rather than
Was
price,
it now?
which shows the sort of health of the business. Raised the full year outlook as well. And then today Reckitt kind of repeated the trick, another Q2 beat. Strong demand in emerging markets kind of helped to offset weaker European sales and a bit of disruption from the Middle East, and also launched a buyback. And today the big standout one is Greggs, which has really spiked on kind of better than expected first half results, kept the full year guidance. And we should point out this is one of the sort of most heavily shorted stocks on the London market. So there might be a bit of short covering at play there in terms of the share price reaction.
It's been such a star performer, isn't it, over the long term, and over the last couple of years or so, it really has hit the buffers. So maybe this is the sign that things are turning to its favour again.
Yeah, I mean, there's always that debate around has it reached peak Greggs? Kind of it's like Greggs everywhere,
Yeah,
ubiquity of the brand. But the management they see go for at least 3,500 UK stores. So the growth story's still got legs. And I guess
Yeah.
talking about that quality theme, we've got a feature on the website. So I've had conversations with some fund managers. They've talked me through how they define quality, some of the metrics they look for, and we've also got some of their sort of 6 highest quality names that they like at the moment. So listeners, be sure to come to the website, put your email details in, and have a read.
yeah, absolutely. Because I mean, I've always found it. I mean, quality gets bandied around so freely these days. It seems almost as if every active manager is chasing the same quality pool. But ultimately, to see what metrics they're actually using is so fascinating because it can often go beyond the kind of really obvious ones that most retail investors will probably be aware of. So really interesting stuff to read that. I'll definitely pick that up later today, James.
Yeah, yeah, yeah. I mean, I have to say, it's been an interesting week from my point of view. We had Barclays out, and of course, very, very widely owned, very popular stock with everybody. And if you look pre-market, you would have had to say, oh, well, they've beaten net interest income, they've raised their full year net interest income target. Investment bank did okay. So everybody was talking, up 5%. It was down 5%. And this was really interesting because what investors focused on instead of the investment banking business or US consumer banking, where they did make big gains, they looked at the basics of it, which is a bank at the end of the day takes in deposits and lends it out. And there's no growth. There's just no growth in loans and deposits. In fact, corporate deposits, which are quite high compared with the corporate borrowing, corporate deposits have been going down. So very interesting why the market decided to focus on that. You've got Lloyds and NatWest coming out. Lloyds tomorrow, NatWest on Friday. And of course, they are just domestic lenders. They don't have a big investment banking business. They don't have a US consumer business. So what that says about them and what the market's reaction will be to them tomorrow will be absolutely fascinating, I have to say.
Yeah, and we've had such a strong earnings season from the US banks. So, I mean, comparing and
Yeah.
contrasting to the UK ones will be fascinating.
Yeah, really will. But you've got some big tech reports out tonight, Steve, and a Fed meeting, of course, the first with Kevin
Yeah, I mean,
Walsh.
there's this ongoing debate about inflation and whether any of the central banks are going to be bold enough to actually start raising rates, whether they keep rates the same, lower rates. Who's to say? It's not for us to speculate about macro like that. But certainly earnings this evening is going to be really, really interesting to watch
Yeah.
because we've got both Microsoft and Meta will be unveiling earnings, and also SK Hynix. They're recently listed on NASDAQ. They'll be unveiling their results. And you've got Lam Research, big chip manufacturing equipment supplier, and Arm Holdings, which many listeners will remember from its UK listing days. So really fascinating tonight. And then tomorrow we've got Apple and Amazon. So be really interesting to watch how the market takes those.
Yeah, absolutely. What will you be looking out for, James? Got a few big names still to come.
It is. It's another Super Thursday, isn't it? So we've got BAE Systems, Rolls-Royce. I'd also be keeping an eye on Bats, Haleon, which is kind of Sensodyne, Panadol, all those kind of household products, and also Rentokil Initial. Very interesting to see what they say in terms of the US and that Terminix acquisition that they did back in the day.
Oh yeah,
and banking up your street again, so Ian, isn't it? There's more big banks to come.
Yeah, Lloyds and NatWest, as I say, I'll be very fascinated. And maybe on Friday, we talked about doing this sort of 2-3 minute segment and we'll look a bit closer at things. Maybe write in to editorial@sharesify.com. Let us know if you want us to do a 2-3 minute slot on the banks, Barclays, NatWest, Lloyds, then let us know. And we could do that on Friday. We've also got Melrose, one of the old market darlings, the buy, improve and sell merchants. We've got Rightmove, which is a really interesting kind of techie story. Is it tech? Isn't it tech? Is it AI? Can they use AI, etc.? We've got Segro, which of course has recommended a bid from Prologis in the States, but there are a couple of investors who are kind of holding out. We've got Shell, the oil giant, hands up, a shareholder. So I'm hoping, we've seen the oil price wing about all month. It seems to be going back up again. And we've got Taylor Wimpey, one of my favourites in the house building sector.
Just to come back to Rightmove, because I mean, Rightmove, Auto Trader, I mean, these were kind of the poster childs a few years ago for the for that node kind of that they just build a brand that ultimately continually feeds itself. So the more dealers or estate agents in Rightmove's case that go on the site, the more buyers that like to come to the site to view, and that seeds more estate agents getting their stuff on the site. So it becomes this virtuous circle. But they seem to really struggle, and I suppose there's a correlation with housing market dynamics as well. So I mean, that'd be a fascinating one to watch.
It will be, and you can almost tie those together. So you've got Taylor Wimpey, the house builder, you've got the banks, which are big mortgage lenders, and you've got Rightmove, and they kind of all interweave there, really. So we have a better picture of the housing market maybe by the end of this week, Steve.
Yeah, so I'm glad you reminded that, listeners. Yeah, I mean, we've been having this debate, you remember from previous podcasts. Yeah, we're tempted to do a slightly longer segment within this existing podcast format on a single stock, or maybe, as Ian said, a sector when several stocks have reported or made some noise recently. I would wonder if you, the listener, would benefit from that. So send your email in, tell us what you think. Would you like an extended 3-4 minute segment about something specific, or are you happy with this kind of general flow, or a separate podcast in its entirety, just talking simply about one issue. We'd love to get your views. So editorial@sharesify.com. Send us your views, and we will react to those views. It's your podcast after all. I think we're running out of time now, pretty much, chaps. So until next time, we'll see you on Friday, I guess.
Yep. Cheers.
Take care.